Okay guys, I'm making this video just to explain how I mark my levels and what I consider to be a key level on a higher time frame. I know there are many other styles to mark levels um, and to mark up your chart, but I'm going to share with you how I personally do mine. So in the live session we will be understanding each other. Yesterday we saw how I marked the highs and lows, um, the swing highs and swing lows, and also the key levels that I could call support level or resistance level, but just call them key level. It's simple like that. Um, and I mark them according to their time frame. I prefer to mark the higher time frame like weekly, daily, and H4, and use those levels for waiting for reaction on the lower time frame, as I'm trading intraday and day trading. So for intraday, day trading, and scalpers, you all know that the daily level is very important, the weekly level is very important, and sometimes the H4. H4 is especially for scalpers, but if you do intraday and day trade, I use weekly and daily levels most of the time. You can also see the 12-hour time frame. Maybe you can mark that as well, but is as far as you understand what the levels are, the time frame is not relevant. So what I'm showing here is, yesterday I showed you the types of key levels. So I'm going to explain to you first on the chart here quickly, and then I'll take you to my drawings that I made up there. Here I have a level. Here I also have a level. Here I have a level. What I'm doing here, I'm just showing you what I mark. Look, this is another level, this is another level, this is another level, and every time price reach that level, there will be a reaction. If it's a break of structure, you will see. If it's a reversal, you will also see. The example I have to show here is this one. Look, when price arrived here, it touched and reversed. Here it broke it, but from here it went up. I can mark another level just to show you how prices react to levels. I have another one here. Let me go closer. You see? Boom, here. I have a reaction right here. Okay? So, what I wanted to emphasize by showing you this is the levels that I mark are where the candle close and immediately the other candle open. So the next candle opens where the first candle closed. Here we have a candle that came from down here and closed here. From the same level, we had an open candle that dropped there. Here we had a candle that closed here, another one opens here and dropped there. This is a key level. Here I have a candle that open here and close here. So I'm going to show you now how many types of key levels we have according to this close open or open close theory. Now look, we are going to go up here. I'm going to show you. I have certain types of candles. Let's go quickly. I'm going to show you here. Okay, now we are here. Look, I have the first categories. The first category is peak and valley. Peak and valley that I can call A and V. Why? Because of the shape they make. If you see A is like this and V is like this, you understand this is a peak. You understand this is a peak, and you understand this is a valley. Okay, peak and valley. So how do you mark the peak and valley? You take the close of the first candle and then take the open of the second candle and then mark it. It can be any shape, you don't care. It can be like this, like this, like this, but whenever it's close and the other one opens the same level, you mark it as a level. Okay, it can be a long candle like this, it's still a level. Okay, it can be a short candle like this, it's still a level. This is for the bearish side when price is about to go down, and this is for bullish when price is supposed to go up. Okay, you mark the level, and when price will come back at that level after making price action movement, you'll expect price to drop from that level. Okay, let me show you here. You see, when price will arrive to that level, it will return and reverse from that level. And if it breaks that level, you already know that it can react differently from here, and whatever happened up there, that's not a problem, but you know how price react here. Okay, you know how price can, when you reach a level, when you break it, it come back to retest it and continue. And if it doesn't break it, it returns here and reverse. The next price action is not relevant, but what I'm showing you is how it reacts to the level as soon as it reaches the level. So the A level and the V, so the peak and valleys, you can see how they react on the chart, but you are not considering the wicks. Okay, you know the wicks, it's something else, it's another subject for another day. But what I'm saying here, you mark the levels according to the close and the open of the body, not the wicks. Okay, and when the price react to this level that you marked here, you will see how price behaves, and then you can anticipate a reversal or a continuation. Let's go on the chart and quickly see that, if we can find 2 or 1 peaks so you can understand, and then I can keep showing you the other parts. Okay, so here, okay, let's go quickly. Okay, I have here, look, you see how the candle reacted to this. We had this bearish candle closed here, and then this bullish candle opened here and went up. What did price do when he returned here? He rejected. Okay, I can show you this by mark this line here. You see, we have this line, price came back here and rejected. Okay, rejected once. We can take our line, expand it, and then see price rejected again. Price rejected again. So you know this is a key zone. We don't look at the time frame. The time frame is not relevant. I'm just showing you the candles. Okay, you see how price reacted here. After this, price came back and retested it, and here this is a valley. Let me look for a peak so you can understand. Also, I have a peak here. Price came down, closed, and opened here, and then you see we have a reaction. As soon as price reached that level, we had a sell. You see, that's how you can anticipate reaction to key levels. Those are my key levels. That's how I mark my key levels. I can mark this one. It's a close, an open level. It's a peak. You see, price came here, boom, you had another reaction here. Whatever happened next, that's not a problem. All I want to see is a reaction. I had a reaction here, broke it, price came down and reacted again and went down to close the candle here. Okay, so the A and the V, or peak and valleys levels, are one of our type of key levels. Okay, I hope you understand this one. I'm going to show the next one.